To this daily market commentary for Wednesday, the 18th of September 2019, a date which will no doubt have been circled on many traders' calendars for the month of September as potentially the most important day of the month of September, the Federal Reserve interest rate decision day. Will they cut, and if so, by how much, and what will they say, both in the statement and also with Chairman Powell's press conference shortly thereafter. All got revealed at 2 p.m. Eastern Standard Time. But prior to that, we had fairly quiet markets for traders looking to lighten up on positions ahead of the Fed. Sterling, which yesterday moved briefly above 125.20, falls back to 124.40, and Euro follows a similar path for 110.70 down to 110.40. Aussie also drops down for 0.6865 down to 68.30. And dollar yen remains fairly steady, trading either side of 108.20. Gold rallies up to 15.10 as US equities take a few points lower prior to the Fed. Today will be a day for crypto to watch from the sidelines, though Ethereum was pretty happy to consolidate around 212 after yesterday's rally through the 200 area. Bitcoin was pretty static around the 10,200 area. So enough of the waffle. What actually happened? Well, as expected, the Fed did cut interest rates by a quarter of a percentage point, but it was not a unanimous decision. And when it came to future cuts, there was also a mixed view from the Fed. As a result, the dollar rallied, with dollar yen jumping from 108.12 up to 108.32, and we had euro dropping from 110.65 down to 110.25, and cable from 124.85 down to 124.55. Gold had a particularly sharp fall from 15.10 down to 14.97. But that wasn't going to be the end of it for gold, as you'll sort of find out in a minute. Equities were already low, but the Dow extended those losses from down 70 down 170 points. Plenty of economists, you're watching TV or reading the paper, saying the US economy is doing very well at the moment and there's no need for future rate decreases. But regardless, the market had an air of disappointment about it, that the Fed wasn't more dovish. The 10-year yield inches higher from 175 up to 178, but it's still a little marginally lower on the day. And of course, before Chairman Powell got to speak at 2:30, a derogatory tweet from President Trump. I don't think Chairman Powell's on his Christmas card list somehow. So next up, the press conference. What would he say? Well, in short, we got a divided Fed. Future rate cuts are going to be dependent on how the economy performs, plus the outcome of events such as trade talks. But we ended up pretty much getting what you would expect from the Fed, and what we've heard from Chairman Powell before. It's pretty much steady and you go. Nothing really suggests we're going to see a plethora of rate cuts anytime soon. Things are going to be very much data dependent and event dependent. And with that, that just kind of added to the disappointment for the market, or at least in the FX markets, where we saw the dollar generally continue to rally, with dollar yen up to 108.47. We had Aussie down as low as 68.12, and dollar CAD up to 133.10. Gold ended up dropping down as low as 14.8350 at one point. All of these moves kind of make intuitive sense when you believe US rates are not going to head much lower anytime soon. However, the rally back in stocks, that was far more surprising. And by the close, the Dow Jones had actually rallied to close up 36 points, and the S&P back to flat. So, why? Well, I think the thing here is the two things. One, the US economy is doing well. The data continuously coming out is strong, and we've had unemployment below 4%. Inflation is kind of sitting around the 2% level, which is the Fed's target. And, for the most part, the economic data coming out is strong, which means, the Fed doesn't have to be anywhere near as dovish as maybe certain market participants want it to be, which is a good thing. And of course, things can change. So this is the second thing. The Fed made it clear, you know, if things do change, they are ready to act. But that's not today, nor tomorrow. So, you know, at the end of the day, I think, you know, we've had 50 basis points cut. Maybe we'll get another 25 before the year is out. You know, amidst what's been described as a, you know, a mid-cycle sort of insurance policy, if you like. But you know, nothing more than that. But the dollar certainly has gained from the statements, and you know, obviously the equity markets took it well also. So an interesting day. From a technical perspective, I'm actually bringing up the same gold chart as I did the other day, an hourly gold chart. But really just updated with you know, the price action we've had over the last couple of sessions, including today, which, as I said, saw this very sharp drop from about 1510 down to well, no, 1483.50. So we've got, you know, we've got one, I suppose you could call it two, three lows sort of in the same vicinity, and you know, we've bounced back up to 1494 at the close of business today. So you know, there's definitely some decent support there, and there are a couple of ways, obviously, of playing this. But you know, you've got 1484, you've got 1480 behind that, which ultimately could be a very pivotal level. So obviously, it's up to you to decide how you want to play it. But some good support there for now. And with that, I will bid you all a good day and a good night, and look forward to speaking to you tomorrow. Cheers.